Joining us now is Megan Horniman, Director of Portfolio Strategy at Verdance Capital Advisors. Tony DeSpirito is Chief Investment Officer for U.S. Fundamental Equities at BlackRock and lead portfolio manager of the firm's equity dividend portfolios. Megan, you actually, in terms of the infrastructure deal, we're all talking about that, but you think the market took solace because of some of the details, and that is that it looks like a free lunch. We're not raising taxes to do any of these things. Is there any such thing as a free lunch? Can it actually work? Can we spend $1 trillion with no new taxes?
Well, we can spend $1 trillion. We've kind of seen that this year. It's just that what happens to the deficit and what you see long term. But I do think the markets are right now kind of taking some reprieve. The fact that we didn't have any taxes in there. There's no gas tax. There's no tax hike. And also some of those things that weren't really infrastructure were not included in that plan. So
you think that the market, if they're, and you mentioned some of them, the home caregiving, you call it climate change. I don't know whether to call it climate resiliency or climate justice. You know what? Larry Fink, when we get to our other guests, he may know which one, because Larry knows all about that stuff. But because those things were not in there, you think the market was positive about that?
Yeah, I think so, because if you start adding more of that stuff in there, that's where you're going to have to worry about how you pay for it. And that's when we have to start talking about tax hikes.
Tony, I was kidding a little bit. I don't know, is it climate justice or climate resiliency? Does Larry know which from which? I love those terms. I want both. I don't know whether I'm asking for too much. No, I'm kidding. But this all points to a value trade for you?
It does. And one thing I would point out on this infrastructure bill is, these are things that we really need and do enhance the productivity of the United States. So when you think about government spending, this is government spending at its best. And so I would point that out. In terms of the value trade, I think the value trade is robust with or without this deal. I look to, one, where we are in the economic cycle, and we're still in the early stages of the economic cycle. Value tends to do well coming out of recession into that recovery for multiple years. And then the second thing I look at is valuation spreads. And valuation spreads, the spreads between the cheapest and the most expensive stocks, those spreads got really wide this cycle. They've narrowed some since the Pfizer vaccine announcement back in November, but they're still really wide by historical standards. That tells me the value trade has room to run. And then this is stimulative to economic growth. And so I do think this helps propel that trade further into the future.
Megan, you point out, and it may not be immediately obvious in a logical way, that the value trade, if it does continue to run, it's dependent on interest rates going up. Why?
Well, I think you've seen that over the past couple months. The value trade has lost a little bit of momentum. Now, I agree. We like value long term for all of the reasons that were mentioned. But if you look at what's happened over the past couple months, growth has resumed some of that leadership. And why? That's because interest rates haven't moved. We've been stuck in a really tight trading range here for the past 3 months. So that's given growth and those expensive tech names the ability to run. But in the end, I think you're going to see interest rates move higher. As mentioned, the economy is doing well. We're in the early stages of this expansion. So this bodes very well for your cyclicals and your value stocks.
Yeah. Tony, I don't know what the prospects are for this infrastructure bill. I guess because of all the, there's another bill that's going to be reconciliation, and you don't know how that's going to play out. But are you assuming that there will be something that is finally left that goes towards some of these areas, and that's why the market's up?
So like I said earlier, I don't think the value trade is dependent on this bill getting passed. That said, I do think some version of infrastructure gets passed, whether it's through this bipartisan mechanism, which I think is the preferred mechanism, or through reconciliation. So I still think we would get this kind of bill either way. It's just a question of how does Congress pass it.
Shepard Smith here. Thanks for watching CNBC on YouTube.